Good morning, everyone. This is Srikanth Rajan, and welcome back to the Stock Market Podcast from MPIinvest.com. So, coming to the market yesterday, it was one day prior to the expiry, today's expiry. So, yesterday, of course, we had expected volatility, and that's exactly what happened. We had a volatile day, but the interesting thing was that even though it was a volatile day, the market moved nowhere again. So it was almost a flat day. For the closing was very flat, close to where it opened. But in between, of course, the market did move around up and down. So multiple times we could see the market, moving up, and then again there was sell-off that was coming on. But then each time the sell-off happened, we could see that it would the lowest level it reached was around 18,050, and from there was a small recovery. So we could see the market actually kind of having some buying pressure there. So we definitely came to know and got it clarified when the FII data came in. So yesterday there was some profit booking by DIAs, which is almost for 500 crores. But then the FIAs have bought for more than 1,300 crores. So overall, it was a net buying yesterday. So of course, the FIAs have continued to buy in Indian market. That's interesting to note. But then there were also some important results that were awaited yesterday. So the Titan results came yesterday after market hours, and as expected, they have come out with very good results. So that naturally means that today we could see some movement in Titan in the upcoming weeks, and that is something good. And we are already having it in our portfolio. So Titan should start moving well, which was in the kind of consolidation mode for quite some time now. So apart from that, if you look at what happened after Indian markets closed, the major data that we were waiting for is, of course, the monetary policy announcement in the US. So let us discuss what happened there. So yesterday evening, when I was getting to bed, when I looked at US market, all the US markets were trading in the green, almost by 0.5% up. But then in the morning when I woke up, we could see the totally different scenario in US. So we had spoken about this yesterday also, that the US Federal Reserve Monetary Policy meeting would probably give out a 25 basis point rate hike, and that's exactly what happened. So there was no a reason for the market to actually react. But then what happened after the rate hike announcement is what has caused the havoc in the market. So there was this, press conference by Jerome Powell, who is the head of monetary policy and Federal Reserve in the U.S. And as he came out and gave a more of hawkish speech, that kind of made the sentiment negative. So what did he say exactly? So what he said was, the first thing is they are not confirming a rate hike pause. Yes. So he did not confirm that, but again said that they would be looking at the data in the upcoming weeks to decide on further rate hike or not. Only that can decide, and that can happen in the next June meeting. So this means that they have not given a dovish comment, but a hawkish comment, and that comment is kind of negative at this point of time in the US, because if you look at the US banking sector is already in trouble. We have seen the Silicon Valley Bank collapse. We have then seen the First Republic Bank collapse. Each time they did support it, but then the market feels that if Federal Reserve doesn't see confirmation on rate hike pause, then it could actually take further more banks into trouble. So that is why we could see the banking sector actually falling big in the US, and that led to the fall in the entire market. So overall, it was a very volatile day yesterday. But let me tell you something interesting. This is a problem against very specific to the US, because when the banks the banks which are used to about 2% interest is suddenly sitting with about 5.25% interest. It is definitely very difficult for them, because the interest they are seeing is about more than almost three times, I would say. So that is the kind of interest rates that they're seeing, and these are banks which are sitting with huge bonds investment, the old bond papers which would give them 2% return, and nobody would be buying those bonds at this point of time, because the new bonds are available from the US government at 5%, 5.25%. Then who would buy it at 2%? So that is kind of a concern, and that's exactly why the banking sector is in a jittery mode in the US. But does that mean we have an issue? Definitely not, because we are our in fact the inflation in India is well within control or well within the target of RBI. First thing. Second thing, the interest rates that we are going on through right now is also well within our expectation and experience. Yes, Indian banks are used to this interest rates, so there's nothing really bad that has happened in India. So if you look at this, one way we can look at positive for India is that when US market looks in trouble, the first thing is that the crude oil prices are going down. Sorry, the crude oil price is going down again. It fell down by almost 8-9% yesterday. So this is a good thing for India because India is a crude oil importing company. So this can be seen as positive. But of course, this could actually give a boost to the oil marketing companies. That is one thing that can be seen, and that's exactly why probably we are seeing BPCL and IOC and HPCL prices going up. So that is one important thing. The second thing is, Indian banks are stronger and the results have come out really good. Unlike the banks in the US, of course, in US also the big banks have come out with decent results, but the smaller banks are looking troubled. Now, the next important thing, what will happen is, see, when the interest rate hike condition is continuing, a lot of people in the US, that is the normal investors who have put their money in the bank, now they've seen two banks collapsing. And they've seen that a lot of people who are invested in those banks or invested in the deposited money in these banks have lost money. So what will a regular depositor do? He would kind of pull out money from the smaller banks and put it into a bigger bank just to be safer. So this is going to cause more worries to the smaller banks in the US. And this can be, of course, beneficial to bigger banks like JP Morgan or Bank of America in the US. So this is why it is creating a big divide among the smaller banks and the bigger banks in the US, which is probably going to cause more trouble for the US as a market. And that's exactly why US has a big negative, but India still okay. India is in a better position. But then when US, which is a world leader, falls down, it is natural for the Asian markets to follow. And that's exactly what's happening. So if you look at SGX Nifty did fall yesterday, and SGX Nifty is indicating almost a 50-point gap down opening today. But does that mean Indian market is in trouble? Definitely not. But it is very important to see how the FIIs will react, because if you look at the unwarranted rally that has happened in the Indian market in the last 1 week, it was only because of the big FII buying. And will they actually start booking some profit today? That's a big question. That too on expiry day, because all of them are sitting with some good returns on whatever investment they have done. So there are chances that a profit booking can kick in. And if at all a quick profit booking kicks in by the FIIs, the retailers might join them in booking their profits, because retailers are also sitting with some decent profit. I'm sure all of our portfolio is also looking in good, right? So there are chances the retailers also book some profit, and if that happens, then we might see a big red candle today. So that is something that needs to be looked at. So it would more of depend on how the FII DIA plays today. That is one thing, and second thing is how the retailers are going to play. So how will the retailers play? More of the retailers will be looking at technical levels. So if you look at technical levels, we are expecting a gap down opening close to 18,000. But if 18,000 is broken decisively, there are chances that the entire retailers also might turn negative and they may start selling. So if 18,000 would be an important level to watch if that is broken. I would say not as an exact level, it would be around 17,950 to 18,000. That 50-point level can be watched out. If that is broken decisively, there are chances the market can turn bearish. But then, of course, DIS will look to support the market if that happens. And that again will bring some volatility, because there might be some buying coming and going down. So it would be, of course, a volatile day. So this is what can be expected out of the market right now. The moment, of course, it will be very interesting to see how the market is closing today with all these details in place. So this is exactly why we had discussed yesterday in the group also that, if you want to be safe at this point of time, it's better to reduce your trading positions because the markets can react wildly in such situations. So it is of course going to be a wild day unless there is a surprise thrown in by the FIIs. So let's see how things go today. So as per my expectation, one important thing that we had discussed was the market would expire this week between 17,800 to 18,300. So that is, I'm still with the same view. So I'm expecting the market to be in the same level. However, I'm expecting probably for today we might close between 17,900 to 18,200. This is my expectation for today. So this is how we had started off this week with a view of 17,800 to 18,300, and from there now we have come down to this level of narrowed down to 17,900 to 18,200. So this is where I'm expecting the market to expire, but this is all my expectation. I hope the market follows that. So that's exactly what I say. The markets are on its own territory always. So that's it for now. Wish you all the best for expiry trading, those who are trading. And for investors, if at all there's a fall, of course, it would be again time to start investing in SIP mode because Indian market is still strong. This is just going to be a knee-jerk reaction if at all that happens. So that's it for now. Wishing you all a great day ahead. But before we leave, do of course remember to press the like button if you love the content that we share, and do subscribe to our channel to ensure that you are updated with all the updates from the market. This is Srikanth and signing off. Goodbye.